This is Kristi Sullivan with Sullivan Financial Planning. Thanks for tuning into my video. Today's video is talking about people's reaction to market volatility, stock market, and what I really mean here is stock market's going down and account balances going down due to events in the world. And events in the world could be a pandemic, they could be an election, they could be just the run-of-the-mill business recession, housing bubble, dot-com bubble, tulip bulb bubble. We have many, many examples. And it's funny, I was thinking during the pandemic, I'm like, gosh, not many of my clients are calling me. I wonder if it's because I've done such a great job communicating and talking to them about not panicking when the market goes down and not selling because of external factors that are happening that make them worry about the stock market. Turns out I was wrong. People were selling to cash and just not wanting to tell me about it. And then I'd find out later. And, I hate to be the luxury financial advisor, but it is my job to advise. And so I've been trying to think how I can communicate better this idea that you only really see average returns on your stock market investments of 7, 8, 9% over the long term if you stay in even during the bad times. I don't really have an answer other than, it's probably my fault that I didn't communicate better with my clients and more proactively, individually call people or email them and say, hey, how are you feeling? Are you thinking about making any investment moves? I probably should have done that instead of these general emails. I just hope that what has happened most recently in 2020 with the economy and the stock market reminds people that stock market performance doesn't make sense a lot of times. So we know unemployment is high. We know small businesses are closing left and right. We know people are losing their jobs. We know people are suffering and ill, and that the economy doesn't feel very good. But the stock market, and this is November of 2020 that I'm recording this video, the stock market continues to reach new highs. And it's confusing and it's upsetting and it's not what people expect. I hope that people will remember going forward, if they had made that decision to go to cash, say in March or April or July or October or November, that it makes sense to try to avoid stock market pain, but it doesn't work. If you try to avoid the pain in the stock market, you won't get the returns, because predicting when the real pain will happen and when the recovery takes place is impossible. So don't put that on yourself. Work with your financial advisor, come up with a diversified portfolio that's taking the amount of risk that you can live with over the long term. And please, please, please just try not to watch your balances when you know the news is bad. Thanks for listening. I hope this was helpful.